What's going on, everybody? It's Jeff here. Welcome back to the channel. Market continues to move to the upside. Every single dip still being bought up, while many are being biased and thinking that, listen, the way the economy is, there's no way the market can continue to move higher. However, investors are still pricing in a Fed pivot and shorts continue to trip over themselves. In this video, I want to go over a couple things. One is going to be AMC officially through its first event date. I will talk more on that in just a moment. And also, what economic activity is happening this week? What could possibly shake up the market, if anything, as of right now? So let's get right into it. First off, take a look at this daily chart. We are hitting some serious resistance levels. You can see previously in October and in January, this 428 to 434 level acted as very strong support. Once we broke that level, we know that once was previous support now acts as new resistance. You can see we rejected off that back in April, and that is exactly where we are at right now. I do believe the market does need to cool off a little bit. Volume has been low, and while the buying pressure hasn't been very heavy, it is steady. We are in the middle of August right now, and generally in the summer time frame, the volume does slow down a little bit as hedge fund managers are on vacation and kids are not yet back in school. There is an old school saying, sell in May, go away. This is exactly why there's a lot of chop, but buyers continue to be very steady while not heavy as of recently. A couple things happening this week. We have our retail sales. We also have Walmart, Target, and Home Depot set to release quarterly results. Now, is the retail sector going to shake up things a little bit? Are they going to report lower guidance moving forward? Are they going to report that inflation continues to hurt their bottom line and that they actually see a little bit lower top line? That could potentially shake up the market. If there is any insight that these stores are going to be able to make it through, okay, the higher inflation and see continued growth and actually just an average outlook moving forward, the market is going to continue to move to the upside. We also do have the Fed minutes being released, which the Fed minutes is, like I've said this before, it's just nothing but a written recap of the previous Fed meeting. Now, while Jerome Powell continues to be a bit hawkish, saying, listen, I'm going to continue to raise interest rates until inflation comes down, investors are still pricing in a Fed pivot. And if you don't know what Fed pivot means, it means that they're actually not only going to stop raising interest rates, but they're going to start lowering interest rates. Okay. Now, once the Federal Reserve has gotten their hand into the bond market and the stock market like they have, there's really no way to get out. Right. And as of right now, considering there is at least a little bit of a sign that potentially inflation could be peaking, well, it just shows that there's a higher chance that the Federal Reserve will lower interest rates. And if the economy does continue to slow down, the number one way to kickstart the economy and give it a boost is lowering interest rates. So that's what investors are pricing in as of right now. The time frame is by the close of the second quarter of next year. Okay, so let's get into AMC. We officially got through our first event date. Okay, and that is today. And while today might not be, all right, the last day because you have the 19th and the 22nd, you can see we're clearly holding above that $22 level of support right around here. Now, open, heavy sell-off. It got bought back up, kind of channeled a little bit of a sell-off again, but very solid day, very flat day. We were down just 1%. The reason why I talk about these 3 days is because, and I've mentioned this before, is because naturally, when events like this happen, okay, there's a sell-off, or there's a run-up into the event dates and a sell-off after the event dates. Now, when we're talking about the specific catalysts, right, whether it's a stock split, all right, a preferred equity like we have here, a stock dividend, whether it's an announcement, okay, a massive event, an expectation, doesn't matter what it is. This is how events, and I use events as a massive umbrella term, this is how they generally play out, okay? So that's the first thing. So we have the 19th and the 22nd. Now, the reason why this is important and it can be very good for anybody who's long on the stock, like I am myself, is that shorts will build positions, okay? They will continue to build positions. So they could have, they hear this coming out, they might have sold off their positions, which might have led to that initial spike, all right, on the 5th, okay? And I'm not talking about massive size. Obviously, it's small size. If you did see massive closing of short positions, obviously the stock would have rallied, a lot more than it did. But you will see shorts start to close their positions and wait for it to run up and then build positions as it moves higher, because this is how these patterns continue to play out. So what does that mean for us? Well, it's when shorts get stuck. Okay, you've watched the entire market move to the upside. You've watched high growth recover a little bit. You've watched the meme sector recover a little bit. You look at Bed Bath and Beyond, okay, and among a few other ones. And that's when shorts can continue to get stuck. Now, shorts have gotten absolutely obliterated just in general over the past, 4 or 5 weeks. And the reason being is because we thought that SPY 400 was going to hold. We thought the CPI, might have, shown a little bit different of a print. And here we are sitting at almost 430. And a lot of people have been shorting, and this is not just retail, this is big funds as well. They've been shorting continuously since that 390, 395 level, really thinking that 400 wasn't going to break. Well, they didn't really fold until they got to 410, 412, 418 hit. Now they're shorting again at 418, 420, and here we are again at 430. So in general, you've watched shorts get obliterated. So the chance that they will trip over their feet if this does not play out as they expect, well, that's just going to mean more pressure to the upside. Okay, so we've got this 15th, 19th, 22nd. Now, it doesn't matter when the last date is when you can own, AMC or own AMC shares to be included in the APE dividend, or to get the APE dividend. Reason being is because you've got our long-term holders, okay, that it doesn't really matter. Like, I've already built my position. I've added to it on some senses of it, but I already built my position in AMC. And especially if it gets back down to a certain level, that's a different story. But where it's at right now, I've built my position out. Okay, that I'm going to be included as well. And I know a lot of other people have, they've built their positions, they've dumped what they can into it. And when it comes to who's ever riding the run up, they're not going to be long-term holders, right? So they're looking for those 3 specific dates: 15th, 19th, 22nd. All right, now shorts are also looking for that break of the 22. The 20 is going to be the psychological level, but that 22 to where momentum changes, all right, and a momentum shifts. So we can continue to hold above that level. Now, if we do get a blow-off event to where big buyers, heavier volume does step in, and the volume has been a little bit better. You see today was 50 million shares, which the average is about 47.5 million shares. But if volume continues to step in and buyers continue to step to the upside, we get above that 27.5, especially that $30 level. That's where shorts will be able to trip over themselves. But just so you know, and the reason why I'm saying this is, it's better to be prepared than be surprised, okay? And naturally, this is how events tend to play out. Now, does that change the entire play that we've been involved in for the last 18 months? Absolutely not, okay? When we talk about, potential for ape dilution, how could it affect AMC stock? That does not, that no matter what happens, that still doesn't change the play that we're in, that we got involved with 18 months ago. Until those core fundamentals change, that's when the play changes. All right, but everything else is just noise. Everything else is just a byproduct. Okay, so just keep that in mind going forward. Look to continue to play the long game. We've been involved with this for it's been over 18 months, probably going on 20 months now. All right, that what happens in the next couple of weeks, in the next month and a half, it's the long game. All right, and considering it's taken a while, they've built their positions. They clearly haven't left as of yet. It's going to take massive little short tripping over before eventually we get to the bigger ones. So just keep that in mind. We still have a few days. That's it for this video, guys. I'll see you in the next one.